What is up, guys? Today I am going to be doing a highly requested YouTube video from you guys. How to get started trading futures and everything you need to know about trading futures. This is going to be my first video of the year, and let's get right into it. So I know I haven't been dropping Sunday watches too much, but they will be coming back. Just been kind of like organizing and working on a couple of things. So let's get right into the video. What are futures pretty much, right? Gold, commodities like gold, silver. The NASDAQ is the future for the SPY. You know, the ETF SPY. You can see there are different prices. SPY is at 695. S is in the 7,000s. But if you were to compare these charts side beside each other, they are literally identical. So if you know how to trade SPY, you could literally take the same trade that you're interested in taking on SPY over on ES, which is the future for SPY. And same thing, as you guys can see, literally an identical chart. They are identical. They move. If I put it on a 5 minute, you guys will see they move side beside each other. Same trades I take here, I could take over here. Same thing I could take over here, over here. So that's why some of the strategies I use on the option side, on the options trading side of things, I just correlated over to the future side of things. And if I look at the Nasdaq, you guys will see that the Nasdaq is identical to QQQ. As you can see, check out this resistance on QQQ, like this December highs and January highs, 629s, would be December highs and January highs here on the NASDAQ, but it's just a complete different number, right? 26,000. This video may be a little bit longer. I'm going to try to dive deep and actually show you guys a few things, and just dive deep into detail. For example, a 26,000 level, you would consider that a psychological level. What is a psychological level? Whole numbers like 26,000, 25,000, 24,000. Those are all levels that get very respected. Those are, when I'm trading futures, a lot of the time, they are off of psychological levels. For example, right now, ES is nearby 7,000. That's probably a level I'd be looking at right now, right? I'd be um, using a lot. So let's get into. So for the most part, those are some of the main. There's also oil. There's corn. There's whole like natural gas, the RTY, which is, oh, there's wheat. There's a whole bunch of different type of features, different commodities as well. So for the most part, these are like the main four that I personally trade. Silver, I just started trading. Gold, ES, and then Q. Those are the top three I personally trade. I'm gonna show you guys how the contracts work, everything you need to know about contracts and how they move. So let's start off with ES, just to keep things very simple. Okay, I'm literally gonna teach you guys from here. There's two types of contracts. There is a mini and there is a micro contract. This is gonna be notes for ES. So if you guys are taking notes, make sure to write this stuff down. A mini is going to be $50 per point. Point, you could consider a point a dollar. So point dollar. What does that mean? So let's use a psychological level just to keep things simple. Let's say we are at 7,000. Okay. Let's say the price is at 7,000 and it goes to 7,001. If it goes to 7,001, it just went up 1 point, or it just went up $1. Say whatever you want to say. It went up a dollar. If I traded a mini contract, that means that I made $50 for that dollar that it went up. And so this is why I really like futures, because you can be like, I'm very systemized. I know exactly what I'm risking. I know exactly what I'm gonna make. I know exactly what I'm gonna lose. The difference between that and options is that sometimes you're not going to be as precise with your risk because the options Greeks are involved. Beta, delta, gamma, implied volatility. You don't have to worry about none of that on futures. You're just, you know exactly what you're risking. It doesn't matter how long it takes, as long as it's within your stop loss and your take profit, it could take as long as it takes, and you don't have to worry about the Greeks, right? So same thing. If it goes from 7,000 to 6,999, then you lost $1, meaning you lost $50. So if I'm risking $1 to make $1, I'm risking 50 to make 50, right? So let's go to the micros next. The micros is going to be $5 per point. So micros, I really like trading micros because I could scale into a position, meaning I can buy one contract here, and if I really like the trade, I'll buy another one and buy another one and work my way up to 10 micros. 10 micros is going to equal one mini because 10 times 5 is $50. So if I'm risking $5 per point per dollar, that means pretty much if it goes from 7,000 to 7,001, then I just made $5. Or if it just, so this is a lot less risk trading micros, and I really like it because what if the candles are too large and I don't want to buy a mini? I just buy half of a mini, which is 5 micros, and still, especially when conditions are very volatile, micros are the way to go. Micros are the way to go. Scale in, scale out. You could hold runners a lot longer. Sometimes on a mini you can't really hold a runner. You just got to get in and get out. But with micros, you could hold those contracts for more profit and more profit. So that is how ES works. My system with ES and my system with NQ or gold, it's all very similar. I don't like risking more than 200 to 300 per trade, which means I don't like risking. So I'll risk 2 points to make 4, 2 to make 4, or 4 to make 8. That is my system with ES. So if I'm risking 2 points, I'm risking 100 to go and make 200. Or if I risk 4, I risk 200 to make 400. And the reason I'm gonna get into detail, the reason why I really like this system is because let's say I lose 2 trades back to back, I lose 200, and then I lose another one. Now I'm down 400. But if my next trade, if I take a good setup and the next trade's a winner, guess what? I risked 4 to make 8, so I made 400 on one trade, even though I lost on these two. So if you guys know what I'm trying to get to, right, from a risk reward standpoint, systematically it makes sense, right? If you're trying to risk a different amount on every different trade, it's unsustainable, right? If you're risking 500 here, 400 there, 600 here, like no, my type of criteria of the type of trades that I'm looking for, they have to fit this criteria in order for me to be profitable. Because a lot of, let's say you have a 60-70% win ratio, even 80 or even a 50% win ratio, right? You could still come out profitable with the 50% win ratio if that means you're losing half your trades. Like if I take 10 trades, I lose 5 out of 10. You can still become profitable. You can still be profitable with the system. So very similar. That's how much I'd be risking on ES. Let's get into NQ. NQ. We're gonna get into contracts and all that in a little bit as well. I just want to show you guys how this works. So NQ, a mini is going to be 20 something got in my eye. It's gonna be $20 per point dollar, right? $20 per dollar. And then a micro is going to be $2 per point slash dollar. So, but the thing is here, the NASDAQ is a little bit more volatile. It moves a lot more. So yes, it's less than ES, but it moves a lot more than ES. If you take a look at just one candle on the NASDAQ, you can see like literally one candle can be, I've seen 100-point candles in very volatile conditions. There could be 200-point candles in very, very volatile conditions. But for the most part, you can see like one candle is like from 124 to 140. That's a 20-point candle, right? That's, if you do the math, 20 times 20 is $400. So if I'm risking 20 points, I'm risking $400. So therefore, my system with the NASDAQ is, where did it go? Here it is. My system with NASDAQ is, I don't like to risk, or I usually risk 10 to make 20, or I risk 15 to make 30, right? I risk 15 to make 30. So if I'm risking 10 to make 20, 10 times 20 is 200. So I'm risking 200 to go make 400. It's the same system as ES. So the type of trades that I'm taking have to fit this criteria, meaning if a candle is like 50 points, I'm not going to take a mini. I'll probably take a micro, right? And that's where micros can be helpful, where there's going to be some larger candles. And that's why you guys see a lot of future traders trading on smaller time frames, such as a 1 minute compared to a 5 minute. I'll still compare both time frames, a 5 minute and a 1 minute. But the 1 minute time frame, you guys will be able to see smaller candles, which will allow you to have these type of risk reward ratios. So let's see, if I'm risking 15 to make 30, I'm risking 300 to go and make 600. And so, like I said, with the NASDAQ, I'm okay with risking 15 points because just some of the candles are going to be larger, right? Unless you just trade the micros. Instead of trading one mini, you could work your way up to 10 micros, which is equal to one mini, or you could do half, right? You could do 5 micros, 3 micros. Really, if the Nasdaq's moving, 3 to 5 micros is a good size to start with. You guys always want to start smaller size if you're a beginner. So micros is the way to go when trading Nasdaq. We're gonna do gold. I won't get into silver. We're gonna do gold though. And after gold, I'm gonna show you the contracts, type of prop firms you could use as well. And then we'll try to get into a strategy towards the end as well. Like I said, I'm gonna try to get into detail in this video. So gold is something else, right? You guys have been, if you guys have been seeing gold's at 55.50 right? New all-time high. So for gold, a mini is $100 per point per dollar. That means if gold goes from 5,000 to 5,001, literally if it just goes up $1, I just made $100. Or if it goes down $1, I just lost $100. So it's a lot more volatile, right? It's a lot more, how do you say it? It's more leverage, right? If I go here to a micro, it is $10 per point, right? So it doesn't mean you need to stay away from gold. You could just trade 1 micro, 2 micros, and trade a lot. You still trade it and capitalize on the volatility that's happening right now. You just trade it a lot lighter compared to a mini. If you're a new trader and you're trading a mini, there's a high chance you're gonna get cooked, you know? So keep the same system as well. Now gold is more volatile, so probably am risking a little bit more with gold, like 200, 300, 300 to 400 sometimes, right? Just because that's some of the candles are larger and so on. But for the most part, same system. Risk 2 to make 4, risk 4 to make 8. Risk 4 to make 8 is typically what I'm doing. Or you could just trade the micros and risk a little bit less. So gold has been performing very well lately. Definitely something a lot of people can take advantage right now. These are opportunities in the current markets. Okay, now I'm gonna show you guys how futures contracts work. When you go here on TradingView, there are 4 type of future contracts. If you type in NQ and then you click this little arrow right here, right? You're gonna see NQ1, NQ2, NQH, NQM, NQU, NQZ. What is all this stuff? So that is pretty much, think of it like this. Futures contracts expire quarterly. It's not like options, like they expire every week, every Friday, nope, it's not like that. It's every quarter. So right now we are in the first quarter as I record this video, January 28th, 2026. And as you can see, the contracts are structured that way as well. This is NQH 2026. If I talk fast, rewind the video, kind of slow it down. If you're following along, great. But if not, feel free to rewind the video and watch some of these parts again. So NQ is the symbol. H is going to be the current contract that we are in. We are in the first quarter. So January, February, March is the first quarter. So it's going to be labeled H. And then just the year that we're trading in. So this is a contract that everyone's trading right now. As it gets closer to expiration in March, everyone's going to switch over to the June contract and we will no longer be trading NQH. We will be trading NQM, right? That is going to be the second quarter. So January, February, March, April, May, June. As we get closer to June, same thing, we're gonna roll over to NQU, third quarter, and that is gonna be till September. As you get closer to September, you'll go to NQZ, fourth quarter to December, and you can see same thing. It rolls over to 2027, and the same four letters repeat. So H, M, U, and Z. You don't got to worry about MU and Z right now because we're not in the second quarter yet. If I go and look at that chart or even look at NQU, you see how the chart doesn't even like, show any candles. But if I go to NQM or NQH, sorry, the one we're in, you guys will be able to see the full chart and pretty much everything that it's showing, right? All of the candles. NQ1, you could just type in that one too. NQ1, it's not going to be the contract that you're trading, but the chart in itself. NQ1 is fine to chart out and take a look at. And it's going to be the same thing with ES, same letters, right? ES, ESH, ESM, ESU, gold, GC. Just so you guys know the abbreviations, GC, ES, and Q. So GC, and you see the letters are different for gold. G, H, J, K, and it's a little bit different as well. So that's gonna be the contracts for ES and Q, gold. The type of system that I use. Now, how do you even trade these, right? So let's go first into the type of prop firm that you could use. I'm not gonna put any affiliate codes or nothing unless you guys want to just support. Then I'll put one in the description for Alpha Futures. It's the only prop firm I have an affiliate code with. But for the most part, I do use Top Step, and I do not have an affiliate code with Top Step. So just so you guys can see here, Top Step. And you type we're gonna go here, and I'm gonna show you guys how this works. So you're gonna scroll down. This is basically a prop firm so that you're not putting your own money at risk, right? And if you scroll down, you'll be able to see choose your account. And so they have three different type of accounts. If you're a complete beginner, it's recommended to go standard instead of no activation fee. I'll let you guys know the difference of the two right now. So basically what it is, it's a challenge. It's a paper trading account that if you can pass the challenge and prove to Top Step that you can trade, they will give you a separate account to where you can actually, request payouts from. You're actually getting paid, but first you have to pass the test. And so the test costs $50. Let's just use the 50K account for an example. The test costs $50. In order to pass the test, you have to make 3,000. You guys just seen how leverage futures can be. So making $3,000 isn't really hard, or at least not in the beginning. Maybe it could be, but as you gain experience, it's not really that hard to make 3K trading futures. Now, this is where they try to get you, and this is why I want to go into detail on this. They allow you to trade up to 5 contracts. The examples I just showed you guys was based off one contract. It goes up $1, you make 50. It goes down $1, you lose 50, and that's on one contract. So it's the same thing. You have 5 contracts, and it goes up $1, like 50 times 5, which is 250. You're risking a little bit more, right? So it's not recommended to trade the full 5 contracts. And I'll get a little bit more into detail on that right now. Your maximum loss limit is 2,000, meaning if you lose $2,000, then you lose the account. You don't owe nobody money. A lot of people sometimes say, "Yo, do I like have to pay the people back?" No, it's a paper trading account. It's just a test, right? So if you lose the 2,000, you lose the challenge, and if you want to take another challenge, it's another $50. So that's why in the beginning, a lot of traders can fail these challenges. But at the end of the day, prop firms are really here to kind of like, in a way, people look at them in a good way or in a bad way. I'm gonna give you guys the way to look at them in a good way, because at the end of the day, if you do have a strategy, if you do know how to trade, then it's a no-brainer. And I'll tell you guys why right now. Because think about it like this. Imagine you pay $50 for an account, and now you pass the test. on the standard account, there is an activation fee. You pay $129 when you pass. So let's say all in, you're in 170, 180. That's everything you put in out of your own pocket, your own money. But now you get to the funded account. On the funded account, if let's say I take it to 10K, these are the rules once you get to the funded stage. If you take the account, let's say to 5K or 10K, let's just use 5K. In order to request a payout, you must have 5 winning days of 150 each. Now, they do not have to be back to back to back to back winning days. Okay? As long as you have 5 green winning days, it could take you as long as it needs to take you. It could take you a month, 2 months. It doesn't matter how long it takes you. As long as you have 5 green winning days of 150. Okay? And let's say throughout that time, you took your account to 5K. You have, in order to request a payout, you need those 5 winning days. And once you do, you can request up to 50% of your total. 50% of your total account balance. So that means you're able to request 2.5K. You can request more once you have 30 days. You can withdraw pretty much everything. But in the beginning, if you have only 5 green winning days, then you can withdraw half. Okay, and so why is that a no-brainer? Because all you paid was 180. You didn't have to risk any of your own money to go and make that 5K. Now you have a cushion to work with, and you're not having your own money at risk. So that is why it is a no-brainer. Now, why a lot of traders do fail those challenges because they don't have a strategy, they don't know how to trade, and obviously, if you don't know how to trade, you're not going to pass the challenge. So yeah, it is recommended to learn how to trade first and build up a strategy before even attempting this. Otherwise, you're going to be paying for challenges, and that's where prop firms just make money off you. But the goal is to make money off of them, right? And so that's why it could be helpful. And for an experienced trader, or if you're like building up experience, it's a no-brainer, right? And at that point, that's where I'm doing the no activation fee, and I just pay $89 and I get a 2.5K payout. There's no activation fee on the no activation fee. But instead of it being 50, it's 89 a month. So this is a no-brainer for me. I pay 89 a month, get the payout, and all in, I'm in $89. So like over a 10, 20x. And what else? Let's see. How does the Top Step platform work once you are on it? So let me show you guys. I'm here on a practice account. And when you are on Top Step, the only platform you could use is Top Step. Other prop firms allow you to use other brokers such as Tradeovate and other brokers. But this is a pretty simple and easy to use platform as well. The chart settings are similar, almost identical to TradingView. Pretty much is TradingView. But I'll show you guys how it looks when you first log on to your account after you pay for the challenge. So typically it'll look like this. Okay, what is all this stuff, right? For the most part, I'm gonna just show you guys how I keep my chart. I don't need accounts down here, positions, orders, trades, quotes, tilt. I don't need any of that. If I want to see that, I could just add it later. I get rid of the DOM. Personally, I'm not using it. Time and sales, personally, I'm not using it. You could use it. Other traders use it and it helps them, and that's great. Personally, I'm not using it. And so I try to keep my chart simple. All I need is a chart and what I'm going to be using to get in and out. Okay? So let's use NQ for example. NQ. Also, one more thing I forgot. If you want to trade the micros, you have to type in the letter M before typing in the symbol. So if I want to trade NQ, it's not just NQ. That'll take you to the minis contracts, okay? That'll take you to trade minis. But if I want to trade the micros, I have to type in MNQ. So as you guys see, it'll say micro. Okay, that's the contract I want to trade. Now, check this out. If I want to have a split screen, let's say I want to have ES on this left side and I want to have NQ on the right side. Do you see how they both just changed to the same thing? Now I have ES here, NQ, and ES here as well, ES. What if I want NQ on my right side? Look what happens. If I type in NQ, it'll just change it back to the left side. So in order to not let that happen, there's going to be this symbol up here. It says add chart link. When you click add chart link, it's going to pop up this little link right here, as you guys can see. And so you're going to change the colors. On the left side, I just keep it in white. On the right side, I just keep it in blue. This is all preference to whatever color you want to keep it on, okay? So let's say in blue, I want to have ES. And on the left, I have NQ, which is white. So what does this even do, right? On the right side, do you guys see how I have an order and it's in blue? We're gonna add one more order here. So you're gonna click the plus symbol and you're gonna click order and you're gonna drag it to top. And so once we're here at the top, I'm gonna switch this right one to white. Okay, let's actually order that just like that. Okay, so my left chart is NQ. If I want to enter a trade on NQ, I have to make sure that I'm on this order. If I want to enter a trade on ES, I have to make sure that I'm trading the ES contract over here, okay? And so that is pretty much what the chart link is, the difference between the orders, and kind of my layout here. You could have your own personal layout however you like. This is my personal layout right here, okay? And how do you get in and out of a trade? This is just for example purposes. I didn't plan a trade out here or nothing, but to show you guys how I would get in and out of a trade. Basically, if I want to get in the NASDAQ, let's do MNQ just to keep things simple. And let's go to a smaller time frame, or let's just keep it on the 5. Let's say I want to enter longs. Longs would be, I think the price is going up. If I want to enter shorts, then I think the price is going down. Okay, so let's say if I want to go long, I think it's going higher. I'm just gonna click this plus symbol that says buy one. And so now I'm in one contract. I just click buy. And so wherever that line is drawn across is the price you entered. So as you guys could see, I am in one micro, meaning I am risking $2 per point. Not a lot, right? And you guys can see I entered at 26,196.50. Wherever that green line is right here, that's where I entered. 26,196.50. That's your entry, price of enter. So you can do math off of that. What if I only want to risk 10 points? So from 26,196 minus 10, 26,186. If you only want to risk 10 points, that would be your stop loss. Let's say I want to target this resistance up here. And I would keep my take profit up at that resistance. And you're pretty much hands off here at this point. If it goes and hits your target, it'll take profit for you. If it hits your stop loss, it'll stop you out for you. Okay, you could take ES at the same time if you want. Probably recommend not being in two different symbols at the same time, to be honest. It's kind of like all over the place. But you could if you want to. If you want to have gold over here, right, micro gold. And this chart is crazy right now. It's actually insane. 5,600 on gold. But yeah, that's how you get it. If you want to just close your position too, you could click the little X right here and it'll take you out of your position. It'll show you how much you're up or down here. A cool feature that I really, really like to use to prevent over trading is this manual lockout feature. Click it. Once you have a great day, you take one good trade, you're done. You don't want to be taking, 10, 30, 40, 50, 60, 70 different trades to, in a day. So you're gonna lock yourself out all day. Just click lock out and it'll lock you out for the rest of the day. You secure your green day and you're a day closer to payout. So that helps a lot. Less is more. And see, what am I missing that I haven't showed you guys yet? This is gonna be the top step layout. That's how the prop firm works as far as the challenge. They do pay you out. Like I said, if you have those 5 green winning days and you request that payout, you can literally get that money out from the prop firm to your bank account, straight to your bank account. Outside of that, that's the layout of Top Step. That's how you get in and out. If you want to practice before even buying an evaluation, you could practice here on TradingView. All you need to do to practice on TradingView is click this little arrow down here and you log into, let's log out of this just so I can show you guys. Log out of paper trading. Then you're going to click this paper trading right here. And you just click connect. And it's the same thing here. Let's say you want to practice on the NASDAQ. and you want to go long, you just click buy. Units is going to be contracts pretty much, and I just click buy if I want to go long. And so the same thing, wherever that line is in the middle is where you enter. So 26,198 is where I entered. Let's say I want to have a stop loss down here at 188 or 183. And I want to have a take profit, let's say up here. Then I just click confirm. And that is how you can start practicing before you even take a challenge, right? So this is a great way to practice on TradingView. For the most part, guys, that is a lot of the basics on futures. I know it's covered a lot. ES, NASDAQ, gold, how the contracts works. For the most part, you want to start building a system around it. Maybe I'll make a separate video of recaps of a lot of the trades that I've taken. If that's something you guys want to see, and if you guys enjoyed this video, make sure to leave a like. Leave a comment if you guys want to see my futures trading strategy, and I will make that video. For the most part, guys, thank you guys for watching. I hope you guys gained a lot of value from this. I hope you guys take advantage of it. So thank you guys for watching. I hope you guys have a great day.